All right, good afternoon, and today this time we're gonna do an end of day review for today. Today is Monday, September 18, 2023. It's the very first trading day of this week, and we have the FO's MC meeting on Wednesday. So for Monday and Tuesday, basically it's gonna be a consolidation day. It's gonna be trapped liquidity. So with that in mind, we can see that there are a beautiful setup around here at open. You see when it make a new low right here. Take a look at a 1 hour time frame. Wow, look at that. That's the liquidity graph right there. As you see, after I take the new low, I take the buy side liquidity. You remember it's closed last week. It did not take the buy side, the prior week buy side, but then in the London, not either London, the pre-markets, which is after London, it take down. Remember when it opened right here, it opened above the close last week, but then I think this is the manipulation right here, right? It consolidated right there. You see the consolidation, and then it go down. It take the sell-side liquidity around that level, and then boom, it go up. It retests the bearish breaker right there. This level. Beautiful move right here. So the move from here to here is $1.76. So that's our target right there. We try to get in around this level. So this is the weekly candle we see it here, right there. So you remember last week, after it rate the buy side liquidity and it start drop, go all the way down, but it did not take the sell side liquidity until today. Today it take it. See that? It take it. And then it's reverse. So let's see how this week gonna play out, because if you treat this as a swing high and order block, right, then we want it to leave this order block, but at the same time we have this also a swing low order block, and you see the pattern. You see the setup right there, order block, follow up, and this is a retest. So basically the bullish setup is still play out. It's a retest right there. So we will know that it could be going down if it break this order block become invalid right there. That's the long setup, and also the short setup still, playing out. So let's see. That's the weekly the weekly time frame. This morning, so if we look at the 5-minute time frame, you can see that right there, right? When it opened right here, new wick opening up right there, it consolidate, and you see this is a manipulation move right there. It go down and check the buy sell liquidity, and then it start going up. So it try to grab the sell liquidity and go up, and we saw that. That's the reason why we try to get in at the retest around here, and we target right here is the first target for this setup. It's the short setup. We target that the first target, and then the second target right here, and then the third target is right here on the bearish breaker 1 hour time frame right there. So we have 3 targets, 1, 2, 3. So if we patient and we have conviction with our trade right here, we just leave it there. Either hit stop loss or hit our target right here. But if we are scaling and we scale out, and this is the scale in forward right here, we can go in here, right here, and then we can scale out when it reach here, and then right there. But let's look at this morning what we see. So here's the note we see, right? What happened? So basically we see the consolidation on the 5-minute time frame. We see the consolidation on London section, which is so-called, another name for that is the ODR, overnight defined range, according to the R model, or Asian section, which is the after the market, and then the prior day low or the week low socially were rated. Right, we saw it rated right there. Then we know that it's time for it to go long. That's right, time to go long, not short. Why? Because it's the Monday, the day before the big news. It's not gonna continue to go down, even though Friday is a huge sell-off day right there. Let me go back to the 5-minute time frame. Yes, right here. So yeah, we consolidate, and then so we have to put in the note right here. Basically, we go long after the society rate, because it is a Monday before FOMC on Wednesday, right? So there's no way that it can need to go down. So it rated the buy side. You remember on Friday it rated buy side, and then on Monday, just before the market, it rated the sell side. So we know that then we're gonna go in, right? We have to remember that the buy side will rate on Friday. Yeah. Yep. So we go along in this. So this setup, let's see. You see at that moment it created a new low right there. But now when we look at the chart, it not show showing. Very surprised. You see, this low is no longer show. So we have to put the node in here. Making new low. When we show that, then that is a signal for it to go long. So we identify this order block on 5-minute time frame right there. So we know that's retest. And I think we try to go in right here at 42 at first. Either way, if we're going to go over here, our stop will have to be 5 cents below here. But the best entry is around this area at 47 or either at 08. Because we see that it rate the buy side right there. You see this rate the buy side and go down, it rate this sell side. But however, it's still honor this order block right there. So that's the signal, and we can yep. So we either go in right here or go in the two, or we can scaling, right? At first go in here, and second we can scaling a second entry right there. But anyway, we lost. We only reached 30 cents, and we gain all the way up here. So we can put our targets all the way up there, which is $1.44. I think more than 44. I think is 86 something. Right, if we are patient and confident, we let it run right here, 42, then again we are gain 91. So right here, 42. So that means the gain is $192. We can say that is a $192 move. So right here, either $1.92. So our risk reward either 1 to 4 or is 30 20, right? It's about 20. It's 1 to 6 risk reward ratio right there. It's 1 to 4 or 1 to 6 risk reward ratio. Let's see. So we want, yeah, at 32. So the idea for to go there, buy side liquidity was taken, and yeah, now we look back, we can see that they 32 a little bit too early, because you want to see the sell side liquidity was taken. It did take right here. The other side is taken right there, and they make a high low. That can be acceptable. However, the next one we made much better at 43, 32, right? So at 42, went entry at 43, right? But then another entry. Wow, we see, wow, this the sell side liquidity taken, and this is also taken. However, if we wait 3 minutes more, 4 minutes more, you can see that it much better also. at 47. It's the best, 47. So where's 47? Yeah, 47 right here. 47, this one, or 46. Then our stop loss is very close to our stop loss right there. Yep. Then after we in the trade, then we have to put right here. We have to debate whether we stay in the trade when we see the retracement, and put that we move to the break even after 50% and realize, right? After the target is realized. So if we go in right here, then we put our stop loss right here. So if when it retraces here, it still not hit our stop loss. And then we debate to see whether we're gonna get out when it hit this hit target right here around this area, right? Which is a short setup on 5-minute time frame, right? That's the very high probability or reliable target right there. It hit it because it's a short setup on a 5-minute time frame. You see order block, failure gap, retest, boom, go down. Here's gonna be retest again. And then later on we see the target, that another target which is new week opening gap. We did mention when we took the trade, that's our very first obvious target that we saw, and it hit there around 11.29 right there at the new week opening gap high right there. And then the next target gonna be this level, and it's gonna hit at another 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 minutes later. So it's gonna be 42. Yes, so it hit as 42 right there. Yeah, so that's hit at 42, and we did record on the 1 hour time frame. That's where we get our target come from, the bearish breaker, right? Right there, the bearish breaker. That's where it hit at, at 11.42 right there. That's how we come up with our target. So it's a beautiful trade and easy trade. So the reason we take that trade, because it's the rationale, right? We see that it rate the buy sell liquidity on Friday, and today in the pre-market we see the consolidation, and then it make the engineer move or the manipulation move. Just check the sell side liquidity, make a new low, and we decided to go long. What if it is a Friday? We may not go long. You know why? Friday, no one want to hold it if the market have a bearish sentiment. But because the reason why we want to go long when the market show up, because we don't want to get caught in the so-called catch a falling knife, right? But with the Monday, the rationale is different, because the Monday is the day before the Monday on the FOMC meeting. You're not going to see the market falling on Monday. So it's reasonable, or it's very reliable that the sell side, in order to go up, not continue to slow down. So that give a reason to go long right there. Let's highlight this one. Yep. and you see the long setup is happened. We see that right after it take the cell solidarity right there, you see huge displacement right there, and then it retracement, it create a bullish order block, and look at that. After that it take the buy solidarity and it dropped the sell solidarity, and we have to wait until it remove, until it clear the sell solidarity drop. Then it's very high, probably very safe for to go in right there after it clear the sell solidarity. Remember the retracement right here after it make a new low, a high low, it's very reliable for us to go in and go long. I think look at the trade last week or so. Let me go to the journal. I believe that we do have that trade last week. I think it's around Thursday or Friday. Let's look through. I think it's very similar. We see that, yeah, right here, beautiful. I'm so glad that I pulled right away. You can see that. So we can see right here. So you see after it take the solid weight, it's gonna make retracement. You see a displacement and then it's retracement. And whenever it visits this retracement order block, it's a very high probability and reliable area to go long, not short. Don't go short in this area. And you see the pattern right there. It tells you that it's gonna go up. It just try to drop the buy solidarity before it go up and right. And it try to rate the sell solidarity. You see right here the last whip, and then boom, it's going up. Look at the charts for today. It's not exactly, but you see the pattern is there. It rated and then it dropped the buy solidarity right there. You see it? It dropped right there, and then it dropped the sell side. Boom, get the sell side, and then it go here. It dropped the buy side, and then it go here, and it wrap this buy side, wrap sell side. Boom, go. And this is the perfect area for it to go long. After you make a high low right there, just mark that area. You see, mark that area. And you see right here, first time make high low, or actually first time from here also makes a high low. Let me see if we see any high low in that area. Yes, you see it make a high low. First time, then boom, it rate that sell side, and it make another high low and rate one more. So it rate twice. The pattern we saw before, it just only rate one time. You see, yeah, actually it rate two times. You see it sweep right there and sweep one more time. It rate twice right there. So it rated one time and then it rate another time. So it also rate two times. So in terms of the liquidity, what we're gonna put down right here. You remember, let's see, 1 hour. Yeah, this one is, yeah, on 1 hour we see the, you see this marker right here. Basically we see the sell-side liquidity rate, and that's where we pay attention. Yeah, this here, right here, you see bright day low were taken. That's the sell-side liquidity rate right there, and then it start reverse or retracement from here. So that's why this move there is a retracement play right there. So after the buy sell-side liquidity rate, we are back on the retracement, and the logical target for retracement is going to be a bearish breaker right there. So that's the idea. You see, we can go in right here or right here. So basically we're gonna yeah, so we see the liquidity run on 1 hour, give us the idea that it's gonna retracement. Okay, so the trade idea is this. That the buy sell liquidity rate on Friday, and now the sell side liquidity rate, and we bet. Actually, we anticipate. So we are anticipate a retracement. To the upside, right? And the target is the bearish breaker. So that's our trade here. Yeah, we know that after I take buy side, it's gonna retest, right? So the short setup is a bearish breaker, fair value up, retest right there. Short setup, right? We see that. So that we use the short setup out at our target. So this is the bearish breaker, and this is the target. That if we go in long, then we know that's the target. We either go in on this candle or this candle right there. So the trade idea that the buy sell liquidity rate on Friday, and we anticipate a retracement to the upside, and the target is the bullish the bearish breaker right here. And when we see this liquidity setup, then we're going to go long on a 1 minute time frame. When we see the opportunity retest the order block, So you see right there. So let's write out something right here so we can see. So right here we can say a new low, right? It's a new low, and basically buy side liquidity prior with low or buy side liquidity correlated right at this spot right here. This is the spot right there, and then the first time it make a high low, it tell you a market structure shape right there. Okay, and what else we see? We see is rate the buy side liquidity until it hit this failure gap, right? And then it come down, it rate a sell side. So we either go in right here or right here after the sell side liquidity will rate. Right here is right there. We're going right here after it right there. See that? So two entry for it. So we can say best entry after buy side liquidity, I mean sell side liquidity rate. Which is spot right here. Yeah, we have to say one more thing. Optical rate and rate, but however it honor the order block, so it just retest on the order block. In this case, a bullish order block. Yeah, so bad entry after that, and it confluent the order block right there. On 5-minute time frame, we see the order block, but this is the order block right there. After it hit this failure gap, also called supply area, I mean, it look like a lot of people want to go short them, right? And that's the mistake right there. They short, right? But then it's a retracement, boom, go back, take all the buy side liquidity. Okay, I think that's capture this, and we go from there. All right, I think we run out of time. That's it for now, and talk to you later. Bye for now.